The Nigerian market seems to be, at this stage of the game, awash with positive sentiment, but the precarious state of the presidency, the status in that regard, does present some downside risk moving forward. Let's discuss what's unfolding here and the impeachment process that we're looking at.
Sure. I mean, we already saw the cabinet now basically say they think he's not permanently incapacitated. So that's sort of open up speculation whether Parliament or the House of Assembly will come through with an impeachment process. But, you know, it's one thing to talk about it, it's another thing to actually achieve it. And the process is actually quite, there's a lot of hurdles in it. Firstly, a third of all the House of Assembly members need to sign a letter sent to the President of the Senate. Then the Senate has to vote on this, or the whole House of Assembly has to vote on this without debate. They have to get a 2/3 majority pass. Right? This thing gets passed on to a panel appointed by the President of the Senate, who must then decide whether there was gross misconduct or not, and that's the key issue, that they must provide proof of gross misconduct, which then that report gets tabled back into the Houses of Assembly, and again 2/3 must pass that. Yeah. Now that whole process, the timeframes can take up to 4.5 months. So, you know, this is going to be a very onerous process. Now, unfortunately, in the meantime, you know, one can understand why the cabinet doesn't really want to come out and you know, say the president is incapacitated. You know, it's a very tricky situation for them. But at the same time, we're now stuck in a situation where for the first 2 months of the president's illness, it didn't have a huge impact because it was over the Christmas season. But now we're getting into a place where we want to start passing bills. Things need to be signed, the budget needs to be passed, the asset management company needs to be, and those all need the president's signature. Of
course, we're already hearing eruptions in the Niger Delta, Nigeria's main militant group, MEND, calling off a 3-month ceasefire as well. With that being the case in just one of the arenas that's seeing reforms right now, I mean, are you as confident in Nigeria's economic recovery as the broader market seems to be?
I think, you know, the economy can continue, because keep in mind, much of the economy has been driven by non-oil sector growth to start off with, right? And what we've seen over the last 6-month period, pretty much since the low point in August in terms of oil production, we've seen this fantastic growth in production come through, and we can talk a little bit later about how that hasn't fed through to the reserves. But you know, so the oil sector has made this fantastic comeback. But at the end of the day, the economy is much bigger than oil, at least from a domestic economy point of view. From an export point of view, the oil sector matters most. But from a domestic point of view, the non-oil sector is more important.
Well, we're going to bring our guest in from Lagos right now into this discussion. Samuel Ocheho, who's at Stanbic IBTC Bank, joins us live from the trading floor over on that end. Samuel, thanks so much for joining us this afternoon. We're seeing in the meantime, in this context, on the currency front, foreign exchange demand by dealer banks triggering some movement on the currency market right now. Run us through some of the movement we're seeing here.
Well, I've heard a lot of talks about the demand being high at the central bank window. We've seen demands as high as $400 million, but I seem to share different sentiment from what people think. If we look at this time last year, the demand we are seeing now was nothing compared to what it was in January last year, January, February, and that could have been explained with the high exit of offshore investors as a result of the global crisis. The kind of demand we're seeing now, if you compare it to what we saw in December and you want to compare apples for apples, then you'll be comparing different things, because in December we saw a lot of oil company flows come into the market from NNPC, from the Shell, the Chevrons, and all the oil majors coming into the market with huge flow for their working capital need, which normally happens towards the end of the year. And that was what made the demand at the central bank window to be low in December. So if you want to compare that to January, then you say the demand in January is very, very high. But I think we're just seeing the normal demand. Considering the import bill of last year that was over 50 billion, and the import bill of this year already projected to be about $54 billion. I don't think we're seeing any unusual demand at the moment.
Leon, let's bring you back into the discussion here. I mean, a number of banks are reopening the funding windows for customers engaged in petroleum imports, specifically giving new lines of credit to those customers. Import financing has become a big business right now for local banks, and that's certainly a good thing for them. But what are you making of this activity in terms of impact on the overall economy?
Well, I mean, the imports, of course, part of the import problem that we've had is the lack of refining capacity locally. And the fact that they haven't been able to refine locally means that they have to export the crude and re-import the more expensive refined product. And this is one of the reasons why we've got this additional demand on, you know, in the auctions. And also, it doesn't help the trade balance, unfortunately. You know, as soon as they can fix up the you know, the refining capacity, I think we'll make a major progress to sort of restoring some of this external imbalance, which really should be better than the numbers seem to indicate.
You were mentioning earlier when we were discussing that foreign sales, forex sales was up in January, and that's preventing reserve growth. Let's get into that and also implications there. Sure.
I mean, we saw in January that the total foreign exchange sales went up to about $2 billion during the month of January, and as your previous speaker has mentioned, it was up from December. Of course, in December the market closes down for half of the month as well. But these numbers are quite a bit higher than what we'd seen previously. So part of this is a reflection of, you know, the requirement for this additional import bill, and at the same time the issue that we have, as we see on the chart up there, we jumped up to a relatively high level in January, and that is quite high compared to previous months as well. So part of the problem is that when we look at the overall reserve level in the country, overall reserves haven't been growing. Now that is very surprising, because we would have thought that in a time when oil production goes up and the oil price is relatively higher than where it had been previously, that the reserves should have started to build. I thought it would. Right? And when we start seeing the amount of FX sales that they've been pushing through, that starts to explain why reserves have held on hold. So in this particular case, I think as we go forward, maybe we can start to expect some late feed through to the reserves, but in the short term the reserves have disappointed as a consequence.
Samuel, looking at the broader economic picture here, I mean, implications of all of this on inflation, where Nigeria is set to import somewhat 85% of the country's total fuel needs. What's your outlook in that regard, and in a context where growth has to be managed just as effectively?
I think the central bank has a lot in its hand now, especially in terms of inflation. We've already seen a lot of threats to inflation in the market. There's all the talk about deregulation of oil. Even the announcement effect of the deregulation is already taking its toll in Nigeria. We've seen fuel scarcity, we've seen fuel price increases, people selling at different rates in various gas stations. That we're already beginning to see, and there's a major threat to inflation. It's already been talked about even in the central bank cycles, and our expectation is that if it continues, if we see the January figures and the rates are higher than what it is in January, then in the February meeting of the MPC, they might take some decisions to address it. Yes, the central bank has said it's going to manage the growth of the economy, but you recall it cannot handle inflation, manage interest rate, and also manage exchange rate. Yeah, they're going to try their best to ensure that all these parameters are taken into consideration for the growth of the economy.
Very briefly, your outlook for the Nigerian currency moving forward?
Well, in terms of the Nigerian currency, I see a stability of the currency. Our foreign reserve is at 42 billion right now. There's a projected benchmark of $57 per barrel for the oil price in our budget for 2010. Oil experts all over the world that we've seen are predicting that over the year, the oil prices are going to hover around $75 to $85. If that is true, then it is positive for the Nigerian economy, because there will be more saving in terms of reserve, and we might see our reserve growing. And the major threat is if there's any political crisis in the Niger Delta. But right now we are seeing calm in the Niger Delta. There's a 2.1 billion projection in terms of oil production for the year for Nigeria. With all this, we expect our reserve to grow. We expect the central bank to be able to support the currency and manage the currency very well. So in terms of the currency outlook, I see stability, at least in the second quarter, and I don't see the exchange rate moving around out of the 148 to 153 band.